The Popular Vehicles and Services Limited IPO opens for subscription today and closes on 14th of March. It has fixed the upper price band at 295 rupees per share. So for a retail investor, the minimum lot size would be 50 shares, translating to a minimum investment of rupees 14,750. Popular Vehicles and Services Limited plans to raise rupees 601.55 crore from the public, out of which 250 crores will be fresh issue, while the remaining 351.55 crores will be an offer for sale, which means the existing promoters and shareholders are selling off their shares. The IPO has 34.94% reserved for the retail investors. Coming to the objectives, the company plans to use the net proceeds for repaying loans availed by the company and its subsidiaries and for general corporate purposes. Now let's look at their business. Popular Vehicles and Services Limited is the leading Indian auto dealer with a full-service model catering to all aspects of vehicle ownership. This includes sales, servicing, parts and accessories, driving schools and third-party financials and insurance products. Their dealership focuses on three key segments: passenger vehicles, commercial vehicles, and electric 2- and 3-wheeler vehicles. Now coming to the market opportunity. India's auto industry has become a major economic driver, growing from 2.8% of GDP in 1993 to 7.1% currently. India's passenger vehicle market is a global leader in growth, ranking second in annual sales behind China as of 2022. Yet it remains significantly underpenetrated compared to other developing economies. This creates substantial room for future growth. India's passenger vehicle industry is expected to grow at a CAGR of 6% to 8% by financial year 28. Luxury vehicle forms 1% of the market, growing at a CAGR of 16 to 18% by financial year 28. Commercial vehicle sector is expected to grow at a CAGR of 4 to 6% between financial year 23 to financial year 28. India, a signatory to Climate Pacts, is also pushing electric vehicles with subsidies and aims for 30% electric vehicle sales by 2030. The electric vehicle market in India is expected to grow robustly. Now let's look at the company's financials. The company recorded revenue from operations of rupees 2,834.99 crores in the first half of the fiscal year. The total revenue grew at a CAGR of over impressive 29% from financial year 21 to financial year 23. It also maintained healthy gross margins and EBITDA margins. When look at the bottom line, the company recorded a net profit growth of 91% to 64.07 crores in financial year 23 as compared to the previous year, and in the first half of financial year 24, it has recorded a net profit of over rupees 40 crores. When looked at the return ratios, the company recorded double-digit ratios in financial year 22 and financial year 23, with both return on equity and return on capital employed being above 18%. Regarding debt, the company carries total borrowings of approximately rupees 764 crores as of September 2023, resulting in a debt-to-equity ratio of around 1.99 times pre-IPO. With plans to utilize IPO proceeds to repay around rupees 192 crores of this debt, the company aims to reduce the debt and finance cost. Talking about valuation, with an upper price band of rupees 295 in financial year 23 EPS of 10.22, the company trades at a PE ratio of 28.86 times, which is relatively low compared to its peer and the industry average. Now the key strengths. First off, it has a solid track record and a long-term standing presence in the auto industry and strong partnership with OEMs. Additionally, there's a positive outlook for the automotive dealership business in India, which bodes well for this company. One weakness is the company's heavy dependence on Maruti Suzuki and Tata Motors. These two giants account for a significant portion of the company's sales and revenue. Such high reliance on just a couple of partners could potentially expose the company to risk if there are any shifts or challenges within these partnerships. The automotive industry is known for its competitiveness and cyclical nature, subjecting companies within it to market fluctuations and intense competition. Having said that, this is Aditi Priya signing off.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment related documents carefully. Visit www.researchandranking.com.